Oil is losing friends on Wall Street as OPEC plus supply hike, risk. I mean, to lose friends and alienate people. I know that this is a great story, but this is about supply coming back from OPEC plus, and that's the core of the worry here in the analyst notes.
That's a big part of it, I think, Manus. The background here is that we've had a summer where oil supply has been tight, that the world has had a pretty good balance, or perhaps even a slight undersupply in oil, and people are looking into the rest of this year, and especially next year. And when you combine OPEC's plan to bring production back to the market with doubts about the economy, especially in China, and robust growth in other parts of the world, like the United States and South America, you get balances that are looking a lot weaker for next year. So that's got Wall Street thinking about how things are looking, and a certain pervasive gloom about the outlook into 2025, as you mentioned.
When I look at some of the lines in Goldman's note, strategically disciplining non-OPEC supply. Now, I think that's interesting because this goes to the heart of the issue for OPEC, which is the ability to move, but they don't want to have an all-out war. I mean, that's what they want to avoid. So that's what they've got to try and balance. If the interest is strategically disciplining non-OPEC supply here in the United States of America, other oil producers will. How finely balanced is that between the all-out price war that we saw unleashed sometimes by OPEC with this balance, this balancing act that Goldman suggests they want to try and achieve?
This has been the strategic dilemma for OPEC for more than a decade now, since we really saw the development of fracking and the boom in oil from the US, is that when they cut production to keep prices robust and to keep the market balanced, it encourages barrels from non-OPEC suppliers. So they're always having to make this balance, and I think they're entering a period where that balance may become trickier still, and it perhaps may be in the interests of OPEC in the medium term to tolerate slightly lower prices to avoid even faster non-OPEC production. But there are many risks. I don't think we should see this as two one-way Manus. We've seen in recent days how geopolitical risks have come to the fore. The tensions between Iran and Israel remain critical to the oil market and in traders' thoughts. And then again in Libya, where we've seen a threat to close down the majority of oil production and exports from one of OPEC's North African producers, 1 million barrels of oil at stake a day. It shows that, these geopolitical risks do remain, and this is far from a one-way story.